Hi everyone, let's go over my bullish and bearish Elliott Wave scenarios on Bitcoin, starting on the medium time frame with the bullish scenario, where we're looking for a 5-wave impulsive structure to the upside, still working on 4, still expecting a 5 to the upside, then towards that 50k area. Most common target area in a wave 4 is between the 236 and the 05 Fibonacci, taken from the low of 2 to the high of wave 3, which is between 40.3k and 35.3k, which, as you can see, has been touched over here. The invalidation for a wave 4 is if price would move to the downside without a wave 5, hitting that 0.618 at 33.1k. More important at the moment, however, are the vertical lines on the chart. These are fib times taken from the high of 1 to the low of 2 to the high of this wave 3 to compare wave 2 in time with wave 4 in time. Now, usually in Elliott waves, wave 4 takes more time to form than wave 2. Wave 2 is usually short and deep and simple. Wave 4 is usually shallow, complex and long, which is then also the case over here. However, we don't want this wave 4 to take too long in time compared to wave 2, because then it doesn't really have the right context and the right look anymore. And that is why I have 3 different fib times on my chart with different colors as well. The 3 fib time, the 4 fib time and the 5 fib time, which basically means this range is either 3 times, 4 times or 5 times longer in time compared to this wave 2. Now, wave 4 being 3 times longer than wave 2 is not a problem. Wave 4 being 4 times longer than wave 2 is not a problem, but you do have to start to consider other scenarios as well. And wave 4 being 5 times longer than wave 4 is usually not really something that you like to see, hence it is red as well. Now today we are on the 4 fib time over here, Friday the 29th of December, and the 5 fib time is sitting on the 4th of January 2024. If this range is going to continue for much longer, then I do have this scenario as an alternative scenario here. Now in this scenario, we are then looking for a higher degree wave 4, where this impulse is already finished, and then a higher degree wave 3 in a bigger wave 1, 2, 3, 4, and then a wave 5. Now you can see I wrote down the volume in 3, and that is because the volume is relatively low in this wave 3 over here. You can see the volume in the impulse in 3 also compared to this wave 1, where the volume in wave 1 is on average higher than in wave 3, which is not ideal. It's not necessarily something you see very often, but it is a guideline that the volume in 3 is usually higher and not a rule. So it definitely does not invalidate this particular scenario, where in this scenario, the target area for wave 4 is again between the 236 and the 05, between 40k and 34.8k, taken from the low of 2 to the high of 3 with the invalidation at 32.4k. And you can also see the fib times again. Now, preferably this wave 4 will at least end after the 0.382 fib time, taken from the high to the low of 2 to the high of 3, comparing wave 2 in time with wave 4 in time. Wave 2 in this case was very long and very shallow, which does increase the probabilities a little bit for this wave 4 to be more deep and shorter. However, this wave 4 still has perfectly fine probabilities to also still be shallow and long in price, but we at least want actually this wave 4 to end after the 382, which is sitting on the 31st of January 2024. So you can see there's quite a difference between the red line over here for the potential green wave 4, green wave 5 sitting at the 4th of Jan, and if price is really going to continue ranging afterwards, we're already going to be looking for the end of January. If we then look at the range that we've been on for a while now, there is 3 scenarios that I'd like to show you. The first one is a WXY scenario here, sideways double combo, where wave W was a flat structure, X is a complex structure, and then in wave Y we can be looking for a zigzag, a flat or a potential triangle, but for a triangle it's currently way too early to call. Common target area for wave Y is between the 0.618 and the 1.236, taken from the high to the low of W to the high of X, which is between 41.7 and 39.1k, which, as you can see, has been hit over here. But we do have more support in this area and also just below this area. The blue box here, 40.9k to 41.3k, and also the gold box, 38.6k to 39k. In the second scenario, we are looking for an ABC zigzag 535 wave 5 structure, where now we are working on a wave 1, 2, and we're looking for a wave 3 to the downside, where preferably we want to see volume increase as price is moving impulsively to the downside, where the most common target for wave C is between the 1 and the 1.236, taken from the high to the low of A to the high of B, which is between 40k and 38.9k, with also still a target being the 1.618 sitting at 37.3k. You can see there's a bit of overlap with some support areas here as well, the golden box with the 1.236, but also a couple of blue support boxes here between 37.7k and 36.3k, to finally then look for a move back towards the upside. Now I also want to talk about two triangles in this particular video. The first one being the triangle over here, and then a wave A, B, C, looking for D, and eventually a E to the downside, and then we're looking for continuation to the upside. Now, a couple of rules that are important is that 4 out of the 5 waves in a triangle have to be a zigzag, and if one wave is not a zigzag but more complex, it's usually wave C, D, or E. That is by far most common, and what we preferably like to see is volume moving down, but at the moment in this range that is something that we see, and that's also quite known for corrective structures in general. But what is important in this triangle and what we don't like to see is what happened in wave B and what happened in wave C, which was also posted by GZ in the Discord group, which you can see over here, where he also wrote this triangle has 2 multi-zigzags for B and C. And that is not what we like to see because it invalidates this particular triangle. But just for the sake of explanation, we have a WXY double zigzag here in wave B. Now, as you can see, wave B most commonly is not a complex structure. By far most common, wave B tends to be a simple zigzag structure, not a double zigzag. So that's already something that does lower the probabilities for this scenario. But then we also have this wave C here, which then has to be counted in some sort of a WXY. Arguably, you can get an ABC in here, but that is not too nice to finish a wave A over here, because wave A has to be a 5-wave structure, and counting this move to the downside as a 5-waver is close to impossible unless you force it. So a WXY works much better, but a WXY in wave C is not allowed anymore if wave B also carries a WXY. But in general, wave B with a complex structure is not something that you like to see. The invalidation is the low here and the high over there. In the second scenario, however, we are looking for a bigger triangle, A, B, C, D, and eventually wave E, where price is now still working on a wave C towards the downside. Same problem here though, that this wave B is then a complex structure in a WXY, which really lowers the probabilities for this scenario and increases probabilities for the WXY scenario or the zigzag scenario I've just shown. Now in this scenario, right, WXY and B, okay, we're then looking for an A, B, and a C to the downside in wave C. Then you want to see a move up in D and a move down in wave E. Invalidation is price moving below A or above wave B over here. And a couple of things that are important are also written in this box. Besides the rules as explained earlier, if this triangle is part of a wave 4, it is likely either going to be too long in time for the green wave 4, as it will then surely pass this 5-fib time. However, it will also be then too short for the bigger wave 4 over here after wave E is in, probably before the 0.382. So then we are still looking for a bigger corrective structure where the triangle is only wave A. Now also triangle are often confused with WXYs. This is something that I see very often online as well, is that the moment price is printing a triangle pattern, people get their trend lines out and they're going to be like, oh look, a triangle. However, they completely forget about the rules of triangles, and they also forget about the potential of WXYs. And very often on this channel we have identified fake outs just because it's not a triangle, it's a WXY pattern. And when you count WXY patterns, these usually fake out, quote unquote, a triangle where you get a move up and down or a move down and up, and you fake out the triangle and therefore also the triangle traders, which happens very often. I usually only start to think about triangles after a wave D is in. Before that moment, the WXY scenarios still very much have great probabilities compared to a triangle. And if we then finally look at the probabilities of the different scenarios, then on the medium time frame we are still expecting higher prices to come, where the highest probability for this range is a wave 4, either in green or in yellow. And on the low time frame, which is this range over here, at the moment the probabilities are higher to still look for more downside, either in the WXY scenario where we're then looking for a zigzag or a flat structure, because for a triangle it is too early to call at the moment, or the zigzag to the downside where we are then looking for a wave A, B and a wave C. I hope this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.